thank you guys so much for being here. We're excited for this one. David and I have been watching you guys from a distance, and I want to introduce you guys. We have Marc and Darci, a married couple and lenders. And been doing it for over 25 years.
Almost 28 now.
28 and counting.
And counting. Yeah.
Yes. What really drew us to you guys was, first of all, husband and wife working together and being brothers. And the people that know us, one of the main questions they say, are you guys really brothers? And the second question, how do you guys get along? How do you work with family, this and that? So seeing you guys, seeing a husband and wife working together in this real estate industry, it's admirable. So first of all, thank you for coming.
Thank you. Yeah, thank you for having us. This is awesome doing this. So we really, really appreciate it.
Yes.
I think and you mentioned in the real estate industry, it's better for us to both be in the industry because it's such a different industry. It requires so many different hours, phone calls at 10 o'clock at night, visiting clients on a weekend. I think both of us understanding that and being involved in it, it helps the marriage versus, hey, honey, you're on a 9 to 5. I got to run to an appointment at 10 o'clock tonight. You know, it kind of breaks into time where sometimes we go on those appointments together.
Yeah.
But Darci understands it, or I understand it, because it's out of the box time frames, because we want to work when clients need us. And they can only get a loan if they have a job, so they're usually home at night. So, you know, we visit them at night. Yeah. I'm visiting somebody this afternoon. I have somebody on Saturday I'm meeting. So, and you mentioned working with your wife, right? My buddies, I don't know how you work with your wife. But in all honesty, God's blessed us. I can't imagine having better business partners.
I love it. Amazing.
How could I not trust my wife as a business partner?
Yeah. And we were talking a little earlier, and real estate is really relationships, right? There's 100 other lenders. There's 100 other real estate agents. Everybody knows 5, 6, that crazy uncle, right?
Yeah.
But it's all about trust, and seeing you guys work together, I think that's awesome. So you've been married for how long?
26 years in
April. Yeah, 26 years. And we both sold real estate prior to that. I actually got my real estate license right out of high school when I was 18 years old.
Wow.
Started doing that. We each owned our own office, being able to close the doors, working for another real estate company. And that's where we actually met.
Wow.
We were kind of competitive at first. And then it turned
Were you guys like in the same area?
In Simi Valley, we just never crossed paths. But it's funny, when I sold my business and I went to work for a broker, and he's like, well, you're gonna have to share an office with somebody. I'm like, I don't want to share an office with anybody, man. I just give me my office, I'll sell real estate, you'll be happy, everything will be good. No, you gotta share an office. All right, I'll share an office. So I'm in there about 2 weeks, and Darci walks to the door. You gotta share an office with Darci.
With her?
Okay.
What'd you start? No problem.
That was a setup. That was a setup.
Thanks for telling me. So that's really how we met.
Yeah. And then I left, so we would work together. But then I left because I love buyers, right? I didn't like taking listings. I loved working with buyers. So I left and went to work for a bank. Started there, and then after the bank, I went to work for a mortgage broker.
Right.
Which is
Of course, I gave her my buyer's.
Yeah, I got his buyers. And then one day I said, you know what? We need a partner up. You need to come join me and do this with me, right? Do it together instead of the other real estate side. So, of course, he said yes.
Of course.
And we did that, and we actually then got engaged, and it all started from there, and we've been together ever since. And we actually love what we do. I mean, buyers are beautiful.
Yeah.
They are. So, yeah.
We've learned over the years to try to separate a little bit. It's harder now because, when you're both going to the office, once you get home, it's kind of harder to break it off a little bit. But the way the industry works, you're getting a call at 9 o'clock at night. You got to handle it. So we've learned to kind of control that a little bit.
Yeah.
So there is an off time, because you have to have an off time without a doubt. Darci works from home mainly. I work from our Westlake office, but it's easier to separate since we're doing it together. Yeah. Like yesterday, it was a birthday. We went to lunch, kind of take a break a little bit, try not to answer the phone. Right. It's a priority, and we have a great assistant, which is important to get us getting along too.
Oh yeah.
So it takes care of a lot of the stuff that we just don't have time to do. And like right at this moment, if an email came in that was really, really important, she would handle it.
There you go.
So I know we can concentrate on what we're doing.
We don't miss a beat on anything. And that is so important in this industry, along with like the realtors that are out there, to be at their call when they need it. It's important. Right. And your buyers, they might have a question or they're nervous. Buyers always get nervous about something.
Sure.
You always want to be available. And that's one thing that's a little different with lenders. So being a mortgage broker compared to us being a banker, right?
Yeah.
That's completely different. A banker, you're 9 to 5.
Yeah.
Your mortgage broker should always be available, which we are, evenings, weekends, after church. Right. During church time, no. Yeah. But after church, we're making calls or we're meeting people, and we're doing that. And they can ask us anything.
That's good.
And we have that long term, with how many years we've been doing this, that we can answer their question.
I think that's very important. Something that really caught my attention, you guys mentioned 25 years in the industry, right? Right now, the people that are watching, the number one question that we get all the time is interest rates, right? And we'll talk about that in a bit. But being in the business for 25 plus years, you've seen
Ups, downs,
up, down,
all types of markets. Yeah.
We started doing loans. We were doing about 13% with 2 points. So you'd pay 2 points to get 13. Obviously, the loan amounts were smaller, but it was 13%.
Yeah.
So when you look at an industry average, rates are amazing right now. You mentioned we get into it later, but
let's jump into that now because the people that are watching right now, they're asking us this all day long, right? So you guys being in the business, where are we right now with interest rates?
Right. We had the blessing of having low threes, maybe high twos, depending on the loan, for quite some time. It was great at the time, but it created a nightmare because the Federal Reserve had to figure this out. How do we get out of those rates? Because they couldn't sustain it for long enough. The bond market, which controls interest rates, couldn't handle it for long enough. So they tried to fix it over 6 months. So as they raised prime rates every month or 2 or 3 times a month, we had 8 increases last year, I think.
Yeah.
And so rates went up to 8% last October. The people that are in the market now looking for homes are like 8% is crazy. That's so high. Historically, it's not high at all. When you connect with sales prices, it gets expensive, right? So what I'm looking at now, rates are in the mid to high sixes, depending on, and we'll get into that later, but what affects an interest rate for a certain buyer, right? We get into that later. But what the Fed's tried to do is lower them. Initially, they went up considerably, up to about 8% last October, like I said. So we're in the mid sixes. I do think they're going to drop to the mid to low fives by the end of the year, and that should be where we stabilize. Get a markets in the low threes or mid threes again, it gets too crazy because it has to get back again. And how hard is it to get back to where rates should be?
So you mentioned that the low interest rates, which was 2020, 2021, very low interest rates, 2%, 3%. You said it created a nightmare. Yeah. Why do you say that?
It creates kind of a bottleneck because if I'm in a home that I paid $700,000 for and my rate's 3%, I'm not apt to sell if the home I'm going to buy is $1.1 million and my rate's 8%.
Yeah.
Because your taxes are going up considerably, your property taxes go up, and your mortgage rate your mortgage payment's going to triple almost. From 3 to 8, it's almost 2.5 times. So if I'm going to sell, I'm going to wait until rates drop a little bit.
Right.
I think when they get to the fives, a seller may be more apt to say, okay, now it's time to make it happen. Yeah. There's a downside to that too, as far as buyers go, and we get into that later. But that, for me, that's the nightmare that happened. It just stopped motivation.
We felt like 2022 was, especially the second half of the year, third and fourth quarter, were the quarters that things started shifting, where prices started, coming down a little bit.
It hit up and down a little bit, yeah.
Yeah, but we felt like, we were seeing that a lot of the buyers were just pulling out because they saw the interest rates coming up, where they were used to 2, 3, 4%.
Right.
But I feel like now that a little over a year that's happened, buyers are getting more accustomed to higher rates. Is that what you're seeing?
I am seeing that too. And I think that the downside that I'm hearing from a lot of buyers is we're going to wait for rates to come down even more. Mm-hmm. And I think that's a big mistake for a buyer right now.
Why is that?
Because the market's getting a little more active, right? You mentioned that buyers are starting to come out. So right now we're seeing multiple offers again. Right?
Oh, yeah, right. Yeah, we are.
So it's listed for 8. It sells for 850. No appraisals. We're back to where it was about 22. Because that was getting crazy, 10, 15 offers.
Yeah.
That's starting to come back again. And for buyers that wait, that's only going to get worse. Because if rates drop to those mid to low fives, more buyers, more competition.
Right.
And there's no reason for values to slow down. Every indice I look at is looking at year over year from anywhere from 3 to 8% for the next 12 months. So if I wait, some buyers say, I'm going to wait and save a little bit more money.
Right.
Okay, so you saved another 10 grand. Well, the house just went up 20.
Exactly. Yeah.
So get in now. I'm sorry, you have a question.
I have a question. So do you feel, I love what you're saying, but do you feel like that's only going to happen in certain markets like LA or Los Angeles County, Ventura County? Or do you feel like that's going to happen everywhere like it was in 2020 and 2021? Because we're working with one of our buyers right now, and that's exactly the situation we're finding ourselves in.
Yeah.
We're finding ourselves competing with multiple offers again.
Oh, yeah, we're seeing the 10, 15 offers.
different softer markets like the Antelope Valley, Palmdale, Lancaster
Correct.
area, it's not as bad. It's a bit different. So, so what have you
definitely is the market, and that has to do with value. So if you see a Palmdale, Lancaster area, they're not going to see the value increase as much as we are Ventura, LA County, right? That's just how it works. So there's not as much demand in Palmdale.
Right.
I think the demand is coming from LA and Ventura County. We got to buy a house. Let's go to Palmdale and do the drive. So we see that, but no, it's definitely market driven. So when I talk to a buyer, we try to be a little more specific to where are you buying.
Yeah.
So that kind of answers the question for us. Okay, so it's a different market, and out of state too. We're doing loans in about 12 other states. Yeah. Different world altogether. Some of them are coming in lower than list price.
Right.
And you have to think, where are they buying? Okay, that makes sense. Yeah. You can't do that here.
We've seen that price points from 850 to 1.2 to 1.3 is where a lot of the competition is right now. Are you seeing the same with those price point compared to the luxury market?
I see it from any bottom price from 400 to $1 million.
Got it.
Maybe that's where your buyers are right now.
Right.
Whether it's 4, 5, 6, 7, 800,000, you're still getting 3, 4, 5 offers because they got to get in somewhere.
Yeah.
Right.
Exactly.
And the inventory is so limited.
Right.
We are seeing more coming on the market. So I would say just in the last 30 days, per se, right? Mm-hmm. Our business has increased so much with people that we've actually worked with. Some of these buyers a year ago, 2 years ago, and they were trying to set themselves up. I mean, that's how we stick with our buyers and like coach them along the way, what they need to do. And now making that decision to purchase, they're out there now looking and doing this. But we are seeing the market very, very busy right now, and it's going to get busier. This whole year, it's going to be an incredible market.
So 2024, right? I mean, last year we saw inventory dropped. We saw the rates. People were just adjusting to them. We saw sellers holding off on selling. Yeah. Now we're seeing rates drop, a little, and it's projecting for it to continue to drop a little bit more, right?
Yep.
And, we're seeing a lot more buyers, a lot like we were just talking about. So right now, you kind of mentioned it, but what are you telling your buyers? The buyers that are been holding off a year or two, and they're seeing where rates are going this year. When you guys sit down with your buyers, are you telling them right now is a good time to buy?
Yes.
Definitely. Yeah. Definitely now is a great time to buy. If they wait, not only that, like to get more money for a down payment, right? Well, if they bought today compared to, let's say, 6 months from now, which we're probably going to have at least 2 rate drops by then, right? The property's going to be worth, the purchase price, $50,000 plus higher. The property taxes are going to be higher. Yeah. Just buy now and then refinance, in 6 months, 10 months, when those rates finally drop to the bottom. Because you don't want someone having to refinance a couple times, right? Yeah. Once we close escrow on a client, is we stay with them the whole way. Mm-hmm. So we'll let them know, okay, guys, now's the time to refinance. We know what the perfect number is, what the perfect rate is. We don't want them to refinance, in 6 months, and then they're going to do it again in 9 months or anything like that. That's a waste of money. Let's just plan it the right way so we know when that final drop is close enough to where they need to be and it's worthwhile, it's financially, positive for them. Let's do it at that time.
Mm-hmm. Yeah, and it's important too. Some buyers will come to us and say they talk to the lender and they mention paying points to buy the rate down. I wouldn't pay any points at all right now, as long as they can qualify, right? Yes. And it's affordable. Paying points now, it's you're just throwing money away because you will be refinancing down the road. So just bite the bullet on a little bit higher payment. Right. Maybe it's out of your comfort zone ever so slightly. And comfort zone is really, really important to us. That's one of the first things we ask buyers when we meet with them. Not what can we qualify you for, but what's a comfortable number for you every single month when you make your house payment.
I love what you said, Darci. You said that you're very passionate about helping buyers and you love, dealing with buyers. So, and then we'll go into the scenarios. What are you advising your first-time home buyers? What are the tips that you're giving them right now?
One thing that Marc was just saying on their comfort level, right? Let's say, no matter, we can qualify someone higher, but let's say they can say, okay, I can make a house payment of $4,000 a month. Okay. We might be able to qualify them with a house payment at $5,000. But if $4,000 is their comfort level and they're paying $2,000 a month for rent right now, right, then what we tell them is, okay, while we're in this process, I want you to pay that $4,000. So act like that's your mortgage payment. So when you get your paychecks, you take that other $2,000 and you put it in your savings account. That way you're prepping yourself ready for that house payment. You know what it's going to feel like. You're not jumping from $2,000 to $4,000 overnight. If we have that option to talk to them about it. And it's sitting down and developing what their wants are, what their needs are, what's important to them. How long do they think they're going to stay in the house? Is it something, it's a newly married couple, they don't have kids yet? If we know that kids are going to be on the plan, right? So maybe they have a small house, maybe it's just 1,000 square feet they're going to be purchasing just to get their foot in the door, get some equity. And then we think, okay, maybe in 5 years, 7 years, they're going to sell, get something else because now they have 3 children, right? And see what's going to happen and have them build that equity. So also look at them and what they want to purchase right now. A lot of buyers we see, sometimes they want the same thing maybe mom and dad have, or, you know, other people out there. But it's not what someone else has. It's what's going to make you comfortable. It's your home, and you make your home yourself, right? That's what it's about.
I like that you have that conversation with your buyers. Not sure if you guys heard of Dave Ramsey.
Oh, yeah.
Yes.
So so we're big Dave Ramsey fans.
Good for you guys.
And he always says, like, you want to own the house. You don't want the house to own you. So you as lenders, positioning your buyers that way, I think it's very healthy. So
It's important. I'd hate to set up a loan for somebody where every time they're making their house payment, they think, what did we do?
Yeah.
Why did Marc and Darci put us in this loan?
Right.
I want to be the person that says, this is affordable. They know they can call us because we give them good advice. And I don't think it's good advice to stretch them to the maximum.
Yeah.
It just isn't. You know, certain loans, FHA loan, for example, we can take them to 55% debt to income.
Yeah.
That's crazy. 55% of their income going to their house payment and their mortgage and their car payments and credit cards. Yeah. It's just too high. So obviously people anticipate I'm getting a raise or we're going to get another job, so they can kind of bite off a little too much at first. And again, with lowering rates, we can lower it down the road, but it's a comfort zone for us. Because like you said, it's a relationship business. And we live in the community we work. Most of our loans are with, you know, so we see people all the time. And I don't want to be, there's that guy that messed me up in that loan. I want to be the guy that, hey, that's Marc and Darci, you guys help us out. We see it in restaurants, we see it at the golf, whatever it might be. And we're really involved in community organizations too, like Darci's on the board of directors for the Boys and Girls Club,
the Police Foundation.
Yeah, wow, that's awesome.
Yeah, I'm the chairman of the Moore Park Chamber of Commerce, and so we do all kinds of events, fundraisers, and you see people all the time, and I don't want to be that guy that messed them up.
100%. And I mean, us as Aguilar brothers, we take people we refer very seriously, and trust is everything, right? Like, we send someone to Marc and Darci, we know they have their best interests in mind.
Absolutely.
What's important, I'm sorry.
No, please.
One thing that's really majorly important is getting these buyers pre-qualified with the lender. If they have their own lender, great. If it's with us, that's even better, right? But get them pre-qualified, because the worst thing that anyone can do is you start showing a buyer property, right? Because they said, I can buy a house at $900,000, right? They think they can. They go out, they look at houses, right? $900,000. Then they meet with the lender because they want to write this offer, right? They write the offer, do that, meet with the lender, and the lender's like, oh, no, you can only qualify for 800, 825, whatever it's going to be.
Never see a house they like after that.
Right. Yeah. And now looking at this other price range, it's like for their work.
Smaller. Yeah.
We've just had that happen with another client that was with another lender that told them they can qualify, very similar kind of range. When I talked to them and looked at the paperwork, we even took it by our underwriters to make sure every dot is, I is dotted, T's are crossed. No, there was literally $70,000 less than what the other lender told them because the other lender calculated the income incorrectly.
Yeah, this person was a teacher, and he used the monthly income times 12, but she only gets paid 10 months out of the year. Some teachers only get paid 10 months,
right?
And they didn't factor that in. So they were showing like an extra $10,000, $15,000 in income that we couldn't use. So luckily they didn't write the offer. They were going to write an offer, but and in that situation too, it's bad for the realtors. It's bad for the seller because an offer comes in, they accept the offer. That seller takes their house off the market, and then the lender finds out, oh, we really can't do that. We can't do that loan. So that's where Darci, I really love the realtors we have relationships with, is to really work with that buyer first, not just talk to them on the phone. Oh, you make this much, you make this much. Especially if somebody's self-employed, right? They say they make $100,000 a year, but once you see their taxes, they've written a bunch of stuff off. They only make 60. So getting the paperwork up front is really, really important to analyze it correctly for them.
So with that being said, how about we play around with some numbers? There's different people watching right now, and they hear this information. And a lot of people delay this meeting just because maybe they have bad expectations or I don't know what to expect. But it's very simple, and this is why everybody that we refer, we're like, hey, you know what? Talk to them. You'll know your numbers instead of looking at Zillow for homes you don't know you qualify for yet, right?
And everyone processes information different. like me, I love talking about everything Dave was talking about.
Right.
Whereas to Josh, he's like, just get to the numbers, man. Just like that's it.
You and I are more of it.
Oh, really?
Yeah.
And that's, again, you mentioned real estate is a relationship business. Certain buyers will be more attracted to Darci than will be to me because they have their numbers.
And this is why it's key knowing your buyer, you know?
Yeah.
So for those right now that are watching us and it's like, all right, what are my numbers, right?
Right.
Like, let's talk to this audience right now. Let's give, an example of 850, right? And we'll play with some numbers. We'll do 850, maybe we'll do a little more luxury, like 2 to 4. Someone comes up to you and, are at this price point. Like, what are their payments look like? What are rates right now? I mean, right now at this recording, we're in February 2024. Can we play with some numbers in that scenario?
Absolutely. Yeah. So when you mentioned rates, when I'm sitting with a buyer, obviously we need to learn all about their income, all about their credit.
Let me give you some more info. So let's say we're talking about
10% down.
750.
Okay.
They're coming in, let's say with 10% down.
Okay.
And making, how much should we say?
Well, let's work our way backwards too. You mentioned 850 earlier, and I ran that one already. So say we're looking at 850 and we have 10% down. We have $85,000 available to us. That's one option, right?
Yeah.
Even if I use a high rate, say we use 7%. Okay. Principal and interest, and that's a lot of times too. If buyers go onto a website to see what the payment is, a lot of times it doesn't have the correct taxes, it doesn't have the correct insurance. It might have the right payment on the interest portion, or the principal and interest portion of the payment, because it doesn't. This computer program said my payment was only $5,000. This is wrong. This is wrong. So for that scenario, 850, 10% down, 7% interest rate with your property taxes. This is in LA County because taxes in LA County are a little bit higher than Ventura County. Homeowners insurance, that's a whole nother issue. We're quoting a little bit higher for homeowners insurance right now because it is going up. So all that involved, and PMI, because you have your monthly mortgage insurance and we only have 10% down. The total payment's about $6,400 a month. Okay? If somebody has no debt whatsoever, I can get them into that loan if they make $13,000 a month. So between two people, if they're making $13,000 and they have a 10% down payment, they can make that happen. Doesn't mean that $6,400 a month is a comfortable number for them. Just because I can qualify them to that doesn't mean it's comfortable. That's the way I always start backwards with their comfort zone. So at 850, 10% down, your payment's about $6,400. You need to make about $13,000 if you have no other debt.
So you're saying that someone that wants to qualify for 850 has to have 700 or more credit score.
Yeah.
But what you're saying, the income needs to be at least $13,000 a month. So if it's a newly married couple, that's what they're looking at.
Yeah.
And 10% down would be ideal.
Yeah. You can get in with 5%. That was just the scenario we picked. They can get in with, and I ran the same scenario on an FHA.
Which is really interesting.
Yeah. FHA, the biggest benefit to FHA is down payment, right?
Yeah.
And sometimes it's because somebody might have a lower credit score. FHA is a little more flexible, right?
Right.
But we're seeing a lot of buyers that might only have 5% down. Say they got 740, 750 FICOs, 5% down. They could easily go conventional. It might make more sense to go FHA.
Right.
Two factors that come into play. Say, same scenario, 850, only 3.5% down. So rather than $85,000 for a down payment, it's about $30,000.
Right.
So with the upfront mortgage or financing about $835, the rate's a lot better. On an FHA loan right now, rates are about 6 1/8, 6 1/4. So the principal and interest is lower. So the total payment with only 3.5% down is about $200 more. It's $6,350.
Wow.
Okay. The reason it's a little bit higher is the monthly mortgage insurance is a little bit higher in FHA. But you can make less money because FHA debt to income scenarios, they're more flexible. With conventional, I can only go to 48% of their gross income can be their house payment and their credit cards and cars. With FHA, even though I don't like to stretch people that high, we can go to 54. So they only need to make $12,000 a month.
Got it.
To qualify for the same property with only 3.5% down.
Got it.
Or let's say they needed, let's say the property needs, new paint, flooring, stuff like that. Right? Not major construction, but just stuff.
They might have the 10%.
Then they'll have that money left over that they can do that on the house after they move in with putting a smaller down payment down.
Right.
So that's another option on it too.
Yep.
Nice. I mean, pretty straightforward. Very interesting that even less down payment, it's fine.
One thing I am thinking about is though, here, because it's getting competitive once again, someone who comes in with an FHA offer, meaning as listing agents, those are things we're considering. So, all right.
But does it? Should it matter? If I come to you with somebody who's putting 40% down and somebody who's coming to you with 3.5% down, but my 3.5% down loan is approved, there's the same risk. When I'm a listing agent selling a property, is there more risk to you as a seller with an FHA loan than there is with a conventional loan? Years ago, there used to be, because the inspections used to be different.
Right.
More work was required in FHA loan. It no longer exists. If you trust the lender and you know that the buyer has gone through all the stuff and have maybe your lender cross-qualify them, which we could talk about later, if you know that buyer's qualified, there's no more risk to the seller than there is if somebody's coming in with 20 or 30 or 40% down. They still get their same amount of money.
Yeah.
Right? So to me, it doesn't make sense that there's more risk to the seller.
Is the underwriting process the same with conventional or FHA, or is it different?
Same thing, Austin.
Yeah.
If your lender's done their homework,
Right.
there should be no risk. If you're just working off a piece of paper that says Mr. and Mrs. Smith are qualified, then I'd be nervous.
Then you definitely don't want to take it. Like when we,
And what we do for a lot of our clients, sorry, go ahead. You can mention cross calls?
Yes.
Yeah, go ahead.
well, not just cross calls, but I was actually going to say when an offer comes in, so we have a whole package that goes with their offer, right? Not only does it have the pre-approval letter, has proof of funds, it has our desktop underwriting that we've already passed it through the system to have an approval. And then sometimes what we do on some of our buyers, we actually get them full underwriting approval before they even look at property. Yeah. That loan is approved minus the appraisal, right? Because you have to have the appraisal in there, but they're already approved for the loan. So that puts a buyer that's making an offer, that offer should go at the top of the list because you don't have to worry about them not qualifying or something coming up the last minute or anything, of that nature.
A good thing to do too on the offers that come in as a listing agent is to have a lender like us and say, hey, Marc and Darci, we've got these two offers. These are the two we're considering. Can you cross-qualify? And that way, we've saved these. Like,
we've got
houses. No way this person cannot buy this house. Do not take your house off the market. They can't buy your house. And it's worked.
Yeah.
And other ones, they get this buyer's perfect, roll with them. We don't try to steal the buyer.
Right.
We just want to make sure that
Yeah, it makes sense. You're not wasting time.
Yeah, exactly right. Because the person's going to take their house off the market.
Yeah.
Right? You want to make sure that buyer can follow through and complete the
So
transaction.
I wanted to add, because I'm curious about this, because a lot of people still have that perception with FHA that, hey, during the inspections, something might come up and they might be more stringent compared to someone who has a conventional.
Termite
Years ago,
it's the only thing.
termites.
So years ago, what was the situation like?
Now it's just health and safety stuff.
Right. I know, like on appraisal, like they look for like a couple extra tickets, right? It's like
Sometimes, pretty rare though. 25 plus years we've been doing this. I've seen maybe 3 or 4 times it comes up where an FHA approval on an inspection or an appraisal is worse than a conventional. Rarely. VA is a different beast. VA, you have a little bit more, especially on termite, because termite you need Section 1 and Section 2. Now, for people that don't know what that is, not only the stuff that's currently infested, but stuff that may lead to infestation or dry rot. Those both have to be fixed. And speaking about VA, that's the best loan on the planet right now, in all honesty. It's got the best interest rate, 100% financing. We're doing one right now. We're closing next couple of weeks. The seller paid closing costs. Literally, the buyers come in with like $1,000.
Really?
And we should be doing this for our veterans.
You mentioned rates. So
Yeah,
rates as of like today, what is it for VA?
Same as FHA, about 6 and 8, 6 to 6 and 8, depending on
Great.
and 100% financing.
Yeah, it's great.
It is.
And they were in a different market too. The seller paid closing costs. Probably wouldn't happen in LA and Ventura County.
Right.
Sellers just don't pay closing costs that often. This was up in Tehachapi. Bakersfield, you're right. Bakersfield. So it's not as competitive, and the seller is willing to pay the closing costs. So this veteran can buy a house.
Yeah.
It was a great house too. I mean, great house.
I ran another scenario too, just for a lower priced market, right?
Okay.
Say somebody's looking at a condo at $600,000.
Okay. Yeah, let's do that.
And they 5% down. They have $30,000. So they're financing $570 with principal, interest, taxes, insurance, mortgage insurance, a monthly mortgage insurance, even with an HOA of $400. Those all vary from $300 to depending on where you're at. The payment is $5,200 a month with everything. So with no other debt, they can make about $10,500, $10,700 a month. So 2 people making $60,000 a year can buy a condo at $600,000.
And right now, I know we're talking about down payment as far as like closing costs and things like that.
Closing costs are another factor. Yep.
You know, in that scenario, let's say the 30,000 down, what was that, 5%? Well, closing costs we're looking at every
When we close 10 to 12.
10, 12,
Yeah.
yeah.
So if somebody has 40 to 45,000,
got it.
cover their down payment.
Something to mention too, I know, because a lot of people just think down payment, but for those first-time buyers, sometimes like, what's closing costs? And then it's like, something else as well. But you said 10, 12.
Sure.
Just to have that in.
In closing costs, people look at the bottom line of this big number. Those are my closing costs. But a lot of people forget that when you have an impound account, your taxes and your insurance.
Right.
If you include that in your monthly payment, now they're going to collect some of that up front. So depending on the time of year, they're going to collect anywhere from 3 to 6 months of property taxes. That's a big chunk. Mm-hmm. And that's part of your closing cost money you need. That's why I say it's from 10 to 12.
Yeah.
Depending on the month you're closing and also the time of the month too.
Yeah.
Because if we're closing on the 10th, we're going to collect interest for the next 20 days.
Right.
You don't have a payment for 2 months, but that's a whole nother scenario. But
Do you have the scenario for a 2 to 4, that price point?
2 to 4 million?
Yeah.
That's a whole different beast. It really is.
Let's talk about that.
Yeah, there's people want. That's why
And the market is different with
I could run scenarios all day long from 2 to 4 million, and they won't apply to maybe one person that's listing. Maybe.
Right.
Because people in that market very often are self-employed. And when you talk about self-employed, that's a whole different can of worms. How many corporations do they own? Is it just one company? Do they have 2? Do they have 3? Do they have 4? We've had people with 5 or 6 corporations. And so we have to analyze those tax returns. Mm-hmm. When you're sitting chatting with the people, the companies make so much money and I'm bringing in, $500,000 a year. But when it comes down to it, the bottom line, they've deducted so much stuff. The joys of being self-employed, you can legally write off a lot of stuff.
Right.
And the goal is to not pay a lot of taxes, so they write off as much as they can. So that $500 in gross income just got knocked down to $140,000 adjusted gross. Mm-hmm. So now they can't qualify for that, right? So there's creative loans out there. Bank statement loans.
Yeah.
Bank statement loans. There's even non-qualifying loans, right? So depending on the credit score, if someone's putting 20% down, 25% down, we don't have to have any income. The interest rate is going to be higher. Any kind of bank statement loan, non-qualifying loan, any type of loan like that, you're probably going to be about 1 to 1.5% higher on the interest rate. And more likely, I'd say a point or 2 points, at least if you're going to be doing that. But it still saves them getting in if they do write off, a lot of their income and things like that.
Mm-hmm. And the good thing about that too, rather than have them, okay, you're going to be doing your taxes this year, kick up your tax really high or your income really high, you're going to pay a bunch of taxes. Rather than do that, let's do the bank statement loan. Financially, it makes more sense. Let's look at your bank statements. We can take the gross deposits on a bank statement, divide it in half, cut it in half, and that's their gross income. Mm-hmm. So if they're bringing in $50,000 a month on their bank statements, they're making $25,000 a month. We can qualify on the 25. No taxes involved, nothing like that. It's pretty simple.
If I remember correctly, we put a house on the market a couple months ago and we sold it. And the buyer that purchased it, Hillcrest.
Yeah.
Was it a bank statement loan?
I think it was a P&L.
P&L, yeah, and just a private loss, depending on the credit score and the down payment.
Yeah.
We can make our own profit loss. I could say, Mr. Smith, you own a company, give me a profit loss.
Yeah.
Some lenders require it to be a CPA P&L. Right. Some don't require it to be a CPA P&L. Obviously, every lender they look at loans as risk. It's a risk-based factor.
Yeah, exactly.
If I'm taking a P&L that Mr. Smith wrote up for his company, the risk is pretty high that the numbers might be off a little bit. So the lender looks at risk. If they're putting 30% down, Mr. Smith did his own P&L, I'm going to charge for that. So the rate's going to be higher because it's higher risk for the investor. So less risk, lower interest rate, higher risk, higher interest rate.
It's also having your mortgage broker to know. That's one of the advantages of being a mortgage broker is that we have many, many investors. Right. Yeah. We know how they all work. We know which ones we like to work with, and we know which ones we don't like to work with, right? If there's going to be issues. And all the different types of loan programs, because we're talking 50 plus different type of loan programs that are out there. And that's why it's the lender's job is to find the best program for the buyer, what suits them, right? What's going to fit their needs.
Exactly.
And to know what direction to take them.
Yeah.
I think it makes a difference that way.
And very often, too, buyers are rate driven. And I agree that's really, really important, without a doubt.
Very true, yeah.
But
Wrong question.
If it doesn't close, the rate was irrelevant.
Right.
If it's 15 days late or they miss their time frames, because it's a contract, right? The buyers have a contract. They have to have their inspection done by a certain date. They have to have the appraisal done by a certain date. They have to remove their loan contingencies by a certain date. If that lender can't do it, there is no contract.
Absolutely.
So because the rate was higher by maybe an eighth or a quarter, maybe I'm going to go with that lender who knows how to do this, and they can meet the time frames, get it done on time, and make it easy for you. And for us, it's just how, again, it's a relationship business. We build relationships with people.
Yeah.
Yeah.
No, and I agree. Something that who you partner with is big. The loan officer plays such a big part in this transaction. And
Absolutely.
sometimes there's people that are like, oh, it's my friend. And they don't text back. They don't call back. They never pick up their phone. They respond days later. Right. So it's very important who you select, the loan officer.
Or the online lenders that people find online. And you're just like, oh, no, you're never going to get anywhere because they don't have to be licensed the same way we do. Right. We have, just like a real estate agent, we have to have our continuing education, our licensing in all our other states that we're licensed in too. So we're constantly doing all the...
I've taken more tests the last 2 months. Really? The states really test. Too many tests.
All right, guys. So
what else?
I think that was great. I think the scenario is going to help out because there's been a lot of different people, right? They know rates are dropping, but like, all right, I checked last year when rates were at 8%, and that 0.5% or that full percent makes a big difference in how much people qualify for. So
for me, I think an important thing for a potential buyer, because so many buyers you might talk to, oh, we can't qualify. Well, they don't know what they don't know.
Right.
Right.
That's true. Yeah.
So the best conversation they can have is with Darci or I.
There you go.
And say, what can we do?
Yeah.
And we'll tell them, here's what you can do today.
Right.
And if we do this, 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 and this, here's what we can do in 6 months.
Yeah.
Here's the benefits of doing it now, and here's the benefits of waiting.
That's what it is. So anybody that's watching right now, I think the number one thing is speak to Marc and Darci, speak to a loan officer, someone that you trust, and get information. And if you don't qualify now,
Exactly right.
they will sit you down. They'll come up with a game plan to get you ready for the right time. So
if there's ever a line that it's from the heart, every conversation I have with somebody, my job right now is to give you as much information as I can to help you make a decision.
right.
If that decision is to buy a house today, great. If that decision is to wait, that's great too.
Right.
We'll just keep in touch and be in communication. You can call me with questions, whatever it takes. It's not the loan of the day. It's not making sure we get them into escrow by tomorrow. It's whatever works best for them.
Right.
We're not saying them something.
Yeah,
I've never
exactly.
closed. I've never closed anybody.
Yeah,
I don't close anybody.
Like
No,
we
we're
have
the same way.
even those classes that people will have you take on like how to close people. How to,
Exactly. Yeah.
we
Hard
don't
sell.
do
This
it.
is not a hard
we don't
sell.
do
Yeah.
it.
Real
This is
estate,
someone's
yeah.
life. This is
If it works, it works. Yeah. If
Someone's
you like the house, the payment makes sense, do it.
Yeah.
Yeah.
I think, and we'll finish with that. I think from one family to another family, I think we like dealing with families, and I think
That's great.
and people like dealing with families because everybody's in a different situation. I mean, selling a home is statistically one of the most stressful times, or even when you're buying a home, so many questions. And for a loan officer, what I've seen, buyers like is the heart of a teacher, right? You're walking them from beginning to end.
Good point.
So,
Yeah.
whoever's watching this, speak to Marc and Darci, speak
you.
to a loan officer, someone
Thank
that
you,
you
yeah.
trust, and they'll come up with a solid game plan to get you ready. But 2024 is going to be an exciting
Really
year.
is.
Yeah, I've never
We're
been
already,
through it.
I mean, in the open houses that we're doing
Yeah,
or
busy.
listings, we're seeing a lot more activity.
Yeah.
So we know 2020, I mean, election year, we could,
Yes.
a bunch of different things going on.
It's gonna be busy.
You know what's going to make it a positive year? The fact that we think it's going to be a positive year.
Yeah.
It's half the battle, right?
Yeah, absolutely.
Yeah.
But we're seeing it with the traction.
starting to happen.
We're seeing it with the traction. But
Yeah.
Marc and Darci, thank you
Thank
much.
you
Thank you
guys
so
so
much.
much. Thank you.
Husband and wife team. You guys are parents, you're grandparents, and a family
Fun
duo.
stuff.
And thank you so
God
much
bless you
for
guys.
God bless you.
Thank you. Appreciate it.